Escalation, Chapter 6. We're going to start with 2 short videos. Now these videos are, again, in Quickbooks Online. However, I find them to be the most condensed information, because they're very short videos, to explain the difference between a sales receipt and an invoice. Though some people kind of think of them as being interchangeable because they sort of represent the same thing. The difference between the two is that an invoice is for payment that you're anticipating to come later. A sales receipt is essentially recording the invoice and the payment at the same time. So sales receipts are only used for kind of a time of sale transaction where the payment and the invoice happen at the exact same time, right? So probably a little unusual in this industry, but explaining the difference. If you would, as this video is playing, go ahead and read the first 2 paragraphs on page 6, and there may or may not be a test question in there.
If you sold a product or a service and got paid immediately, you'll create a sales receipt in QuickBooks. Enter the customer who's paying you for something. If this isn't a customer you've entered into QuickBooks yet, click Save. If you don't keep track of your customers' names, you can leave this blank, or create a generic customer, like internet sales. Only the customer's name gets saved. You can go to the customer page later to enter this customer's contact info. Now enter the products or services you provided for this customer. If this is a new product or service that you haven't entered into QuickBooks, type it in and click Add. Enter information about this product or service. Most of this is pretty self-explanatory. QuickBooks needs you to choose an account for this product. This isn't a bank account, it's a bookkeeping account called an income account that goes up every time you sell this product. Now, you can fill out the rest of the receipt. Be sure to enter the payment method your customer used to pay you. If they paid by check, enter the check number into the reference number field. Also, enter the bank account you deposited the money into. If you group this check with other checks and cash that you deposit all at once, choose Undeposited Funds. After you deposit the group of checks and cash in undeposited funds, you'll need to record the deposit in QuickBooks. Now it's your turn. In your QuickBooks, create your own sales receipts. You get both a pretty receipt to hand to a customer and the record of a sale in your books. When you do work for someone or sell products, how do you get paid? If the customer pays you at the time of the sale, use a sales receipt. But if your customer will pay you later, send her an invoice. She can even pay you directly from the invoice. Here's how you get started. Select the customer you're invoicing. If this isn't a customer you've entered into QuickBooks yet, you can add her details here, or just click Save to add this name to your customer list. Tell the customer when you want to be paid by selecting terms. For example, net 30 means this customer must pay this invoice within 30 days after the invoice date. Now, enter what you sold. If you haven't added this service or product yet, click Add. QuickBooks helps you decide what kind of product or service this is. Now, fill in the information about what you're selling. It's easy to email this invoice to your customer. Just be sure to enter her email address. It's a good idea to save your work so far. Want to see this invoice the way your customer will see it? Check out the print preview. It's a little plain. Let's impress your customer by adding your logo. Select your logo file. QuickBooks matches the template colors of your logo. If you'd like a different color from your logo, just pick it on the image. If you'd like a different look, QuickBooks also has lots of templates to choose from. You can customize your invoice even more with these tabs. Now it's time to send the invoice to your customer. Online payments make it fast and easy for your customers to pay you. Once you're signed up, QuickBooks adds an encrypted Pay Now button to your invoice. You can change the subject and the body of the email to anything you like. Here's what your customer sees in her email. Your customer can click it and pay you right away. And when your customer pays you, you'll see a payment transaction here, and the money will be deposited in your bank account. Now it's your turn. Start creating secure invoices and sending them to your customers.
So did some of that look familiar when they said about adding a product or service, or in desktop they call it adding an item? So we have to have our items there to know or map them to what we're intending to have on the customer facing side, which will then be mapped to not a bank account, but a bookkeeping account from our chart of accounts that we've already established. So that being said, page 6 is the overview. So we've read that section through. Page 8 is telling us using sales forms for payment at the time of the sale. So we're saying probably sales receipt does not apply to most of us. Filling in the sales form is on page 9, and I want to give you an example of the shortcut that's demonstrated on page 10. So when we create an invoice, we spoke this morning about using tab, and so why I recommend tabbing through is because it prompts you to fill in every field. So we've put the name in, we're going to tab, it's going to remind us we need to put the class, we're going to tab again, it's going to ask us which template that we're going to use, because you can have multiple invoice templates. A great example would be progress invoicing. If we're doing a project that's just a small job, say for a residential customer, it's just, we're just gonna put it on the deck. It's not we're not building a house, we're not doing a complete remodel, this is a smaller job, and we just said, we're just gonna invoice you for the whole thing. It's a small project, $5,000. We wouldn't then use a progress invoice because it's just gonna be one invoice for the whole job. So we might just have a template for non-contract work. Another good one is in the nonprofit world. So sometimes in the nonprofit world, they have certain things that they do sell as part of fundraisers, and also they might have membership dues and things like that, that they are sending something that would say invoice on it, and that would be appropriate, or maybe it would say pledge. But they also have donations that were not part of, this is not a membership due or whatever, this is just giving up above and beyond your dues. And so they might want that template to say, rather than a pledge, because it wasn't money that was pledged to be given, or membership dues, they might want that one to say in the top right, when it prints out, in big letters to say, donor receipt or donation receipt, and the message on the bottom of it might, for the membership dues might say, as a reminder, your dues are due every month by the first of the month, such and such. But if someone's given a donation, they might want it to read, thank you for your donation, that has helped, and that might be what they want on the bottom of that template. So rather than changing it every single time, they can just have 2 different templates, and if it's a donation, we're gonna use this template. If it's going to be a membership dues, we're gonna use this template. So this is gonna force us to make sure, because the screen, for us, is gonna look the same. What it's going to change can be what prints out. So we want to make sure we're using the right template. Of course, the date, the invoice number will populate automatically. It will just go to the next number in sequence. The bill to, ship to address, terms, are these the correct terms for that customer? So that therefore is the due date. And then we're going to tab and we're going to fill in the items, quantity, tab, rate, tab. That's correct. Okay, it says tax, but in this case, it's actually non-tax, and I'm just tabbing through, and that's ensuring I'm filling out all the correct fields, and I've checked everything over. And when I'm done, I can save and close. So in this case, I'm going to clear that. So that's demonstrating using that tab. I highly encourage it, and it's demonstrated on page 10. Page 11, on the very bottom, number 4, you might highlight invoices and other sales forms can be printed. We know that. They can be emailed. On the bottom of page 11.
Page 12, top of page 12.
Oh, top of page 12. Okay, good to know. Thank you. Page 12. Number 4. Printed, emailed, or saved as PDF. So sometimes you want to save that invoice because you might be attaching it with some other things, some plans, some other documents. So rather than emailing it directly through Quickbooks, which is only going to send the invoice, there are times it's appropriate to save it as a PDF, or maybe there's people that work for the company that don't access the Quickbooks, but need to see the billing as it goes out. So you might have a folder on a shared drive that's got all the customer related things. So you can save it as a PDF and drop it into that folder. So printing, emailing, and save as PDF are all options for you. May or may not be a test question. All right, and then coming over to page 13, we're going to talk about repeating a sale. Again, I don't think this applies to you folks today, but as an example, you can put an invoice in and tell it to repeat, or it's called in QuickBooks memorizing, a certain number of times. A good use of this is someone who has a rental property. Someone comes in, they sign a lease, and they say the rent's due the first of this month. It's $900 due the first of this month. It's a 1-year lease. So they tell it to memorize and post the first of every month for the next 11 months. Because we have the first one there, so we need 11 more. And rather than going in and posting everyone's rent every month, how much is due from each tenant, QuickBooks will just automatically post the invoice at those intervals. So great for something like that that's the same amount every single month. Again, membership dues, subscriptions, things that are the same amount every month. For most of you, this would not apply, but if you're interested in how that works, that is on their 13 and 14. Batch invoicing, same concept. Again, appropriate for something subscription-based, maybe a lawn care place that would just type in, okay, here are all of our customers that we provide lawn care services, and this month we did 3 cuts for everybody because the 4th week was raining and we didn't get to it. So they can put in the quantity of 3, and as a batch, bill all of those people. Same thing with someone who's subscription-based, here are all of our subscribers, and as a batch, we're going to invoice them all for this one thing. Right, so don't think that applies to anyone in here. If only it could all be that easy, right? So that is available there on page 15. 17 we covered at that was our very first page we went over this morning. So let's keep going to page 20. This is price levels. Really great feature within QuickBooks, a very underutilized feature. So let me walk you through what price levels are, and then you can determine if they would apply to you. We've already talked about creating your items. So if we've created an item, for example, a door, and it's a solid wood door, and it's $300 is what we sell the wood door for when we're installing it. That's not including the installation, that's just the cost of the door. However, we do some residential work, but we also do some commercial. And whenever we're working with commercial, we're going to up the price of every item by 5%. Okay? So residential, the door is $300. But if ever I do commercial work, I just charge a little bit higher for the headache. I charge an extra 5%. Okay? I'm just making this up. That's what I can do with a price level. I can make the item, the solid wood door, $300, and say for everyone it's $300 unless I set up a price level and call it commercial. And on commercial I say it's a fixed percent increase of 5. So whenever the customer, remember we had the drop down for customer types, if the customer is selected to be commercial, then QuickBooks will recognize automatically, I don't have to remember to do it, if I set up the customer correctly, it will recognize that every time I sell them an item, it's going to be 5% more than the standard price. The same thing would work in reverse. If I say, well, my customers are either retail or wholesale. So retail, this is the price. But if ever someone buys from me wholesale, then it's automatically going to be 10% less than the set price. So everyone I've coded on the customer setup as wholesale is automatically going to get a lower price. I don't have to remember to go in and give them a discount. The customer never sees on the invoice that their pricing is somehow different. It just calculates it. It takes the price up, down by percentages. There are, as you can see from the screenshot on page 20, it can be by percentages, it can be per item. There's a lot of coding you can set for this. Now, it does not apply to everyone, and again, it's a really underutilized tool, but if there's ever a certain customer or project and you're like, oh, I forgot to put in, I told them everything, there's, always 10% less than our regular price, and I always forget to put that on there, this is how you can just pre-program it. So I don't think this would apply to anyone in here, with the exception of possibly Brittany, if you had a situation where your services cost, X
Think about
amount.
weekends and holidays.
Yeah, that might be a way that you can add a special pricing, or if you do all your pricing based on residential, but in the event that you get called in on a commercial project, the pricing would be different. Whatever is the case, maybe this would be a good way to pre-program it, so you don't have to remember that. We have a client who, when you're doing business-to-business work, sometimes they make you jump through a lot of hoops to do your billing. So it's where residential customer, you could just e-invoice them at the end of the day and it's easy, but certain commercial, I've heard, excuse me, I think it's the pharmaceutical company, what is it? Teva Pharmaceuticals, I don't know, they're moving out or have moved out. But apparently to bill them and also to bill either Walmart or Walgreens, you actually have to get a login for their billing system and take your invoice and upload it to their billing system and fill out their forms. And so by the time you've done that, you could have just done a whole other job. And so that might be a great example of, whether it's Walmart or Walgreens, whenever Walgreens calls, because their billing takes us twice as much time, theirs is always going to be, 3.5% higher than our standard rate, because we know that we've got to jump through a lot of hoops. The same as there are certain companies that they only pay. It doesn't matter if your invoice says that the terms are net 15, their terms are net 90, does not matter, and you cannot charge them a late fee. That is part of when they hire you, they will just say, we pay in 90 days and we do not pay late fees. So you can't charge them a late fee, but you can charge them, 5% higher on the front end. So that might, when you're encountering those kinds of companies, absolutely fine, it happens all day long. We're grateful for the business and we thank them for hiring us. But when it takes a lot more of our time than our regular customer, maybe charging them slightly more would be appropriate. So that is how you would do that. And then you associate the price level with the customer. That's page 21. It shows you exactly where to go in and just say, well, once you establish your pricing levels, you just go in and the drop down menu will be on the customer setup, and you just say they are coded to have this pricing level, whatever that is, discount of a certain percent. I've also seen people, when they're doing work for a nonprofit, that they automatically have it coded to be slightly discounted because it's nonprofit. And to be fair and equal to all nonprofits, they just do that across the board. So when the nonprofit asks, can we have a discount because we're a nonprofit, you would be able to say, we actually pre-applied a discount because we have a discount for all nonprofits, and that kind of keeps it fair and equal for everyone. So, again, great feature, underutilized even for the folks who could use it, but I don't think it applies to everyone in this class. Page 24 is about the income tracker. Now, kind of going a different direction here, but the income tracker is a shortcut. Again, a very visual screen. We talked about the snapshot being a really visual screen yesterday. The income tracker is a really nice shortcut for those of us who understand information, interpret information very visually. So the income tracker is going to tell us, just by analyzing the information that's in the bright colors on the top, starting with the left, how many estimates do we have open? So what have we estimated that we haven't followed up on? What jobs have we estimated that we haven't actually gotten awarded? Do these need to be closed, or do we need to nudge them a little bit? So we can click on the information we're looking at, and it's going to tell us what estimates make up those open estimates in that amount. How many sales orders do we have out there? So people have ordered from us and we haven't fulfilled the order, not typical in this industry. Open invoices, okay, so who owes us money? And then, wouldn't this be nice if this ever happened? 0 of those open invoices are overdue. Everybody just always pays us on time. And then, well, this would be bad too, though, equally bad. 0 have been paid in the last 30 days. So somebody better check the mailbox, right? So these two probably aren't all that realistic, but again, we're working off a sample company file. So this is a really nice shortcut to come into and just kind of say, particularly when there's amounts in overdue, you can just click on that. It will tell you what invoices make up the overdue amounts. And particularly as a measure of having great customer service, calling those folks and just, kind of asking them, confirming did they receive the invoice and things, and making sure we're doing our appropriate follow-up. So that is all on page 24, the income tracker and how to get to it. Page 26 is having to do with creating letters from within QuickBooks. Very handy tool if you ever have to do collections for your company. I used to work in collections, and I actually much enjoyed doing collections. But that might have been because, for me, no one was intimidated by me calling whatsoever, because when I'm on the phone, I sound like a 12-year-old. So I just called folks and very nicely asked if they wanted to send money that day, and if they could, they did, and if they didn't, I just called the next one. And so, collections, we think of collections as a very confrontational process, and nobody wants to do collections, and but it really doesn't have to be if you have a collections system in place. And this applies to every company, large or small, that if you wait until invoices are severely overdue before you start calling, the conversation can be a little bit more uptight. So, particularly if you are a smaller entity and you're having to call on customers that you've gotten to know a little bit. So what happens is, as a business owner, if we wait until the 120-day mark and we're out of money because we can't pay our bills, so we say, well, who owes me money? We go to our income tracker, we say, oh, well, they haven't paid, they're 3 weeks late, I'm gonna call them right now, because we're feeling uptight about not having the money to pay our obligations. If we wait until that point to pick up the phone to make phone calls, then that conversation is probably not going to be as friendly. The customer might sense the urgency in our voice. So the best way to handle collections in QuickBooks is fully equipped to do it, is to begin at the 30-day mark, making the phone call, particularly if it's someone you've never done business before, if you've never done business with them before, at the 30-day mark, calling and confirming that they received the invoice. Making sure, was it supposed to be addressed to someone specifically, and we just sent it to the address rather than attention to whomever, so it didn't get to where it needed to go. Sometimes the address, we look up the address online and that's an office, but not the office that was supposed to get the bill, and no one bothered to forward it to the right place. Sometimes, like we were just talking about a minute ago, they may have their own specialty billing system. So we mailed them a bill and they said, oh, we don't pay that way. You have to log on to such and such and you have to put the bill in through here, and that's the only way that you're gonna get paid. They didn't call us when they got our paper bill to say this isn't how we paid. They waited for us to call. So rather than us for waiting the 120-day mark and calling and giving somebody a hard time, if we call it the 30-day mark, we're just asking questions. Did I send it to the right place? Does the bill, certain have requirements? Oh, well, if you didn't include the PO number or whatever information, we can't pay it, but they haven't called us to tell us that. So by following up at 30 days, we're just asking questions. Did you get the bill? Is it correct for your accounts payable department? And we're just following up. At the 60-day mark, we can send, in QuickBooks, they call it a friendly collection letter. It literally has the word friendly. From friendly, it can escalate. It's a pre-written letter. It fills in all of the information for us. There is something called a harsh collection letter. So we hope that we don't jump from friendly to harsh, right? But by the time that you're at the harsh collection letter, you're probably going to send that letter certified. But we're not going to escalate to sending a certified letter without having a conversation first. So if we've had a conversation at the 30-day mark, at the 45-day mark, we've assessed a late fee. At the 60-day mark, we've sent a very friendly letter. Between the 60-day mark and the 90-day mark, we've made another phone call. Hey, did you get my letter? Are you able to make a partial payment? Can we get some of this money in? And every time you're calling, you're going into your notes in QuickBooks you're hitting this drop down here, you're saying add new, and you're doing a date and time stamp. Okay, so this is the date and time you called them, you put your note, spoke to Sally Mae, she said they didn't have any money this week, but they can pay next Friday. That's what that note says. It's just in a, I speak the language, it's very unique. And then I'm gonna make for myself a new to-do that's going to remind me to call them next Friday. There we go, next Friday. And I'm gonna put the note in there to say that the bookkeeper that I spoke to said that they're expecting to get paid on that job next Thursday, and that they can cut us a check Friday. I put this to-do in here as a reminder, so QuickBooks will remind me to call her next Friday and say, hey, can I come by and pick up the check? I put that note in there, I saved that. I've got my record of every conversation that I had with them. So should they call and speak to someone else, anyone else can read the notes about what we've talked about and what payment arrangements that we've made. And I have a very nice, clear history of the conversations we've had. Now, if I do call next Friday and they say, nope, still can't pay you, well, then if I start escalating to, you know, we've got to send out the harsh collection letter, we've got to send out something certified, whatever is the case, or maybe the owners just need to sit down and come up with a plan. But I've got every correspondence that I've made, whether phone calls, if I sent them an email, I want to chart that as well, because we don't have to go back in and be like, well, I know I emailed them and told them that they needed to pay, but then I've got to go somewhere else to look up that information. So if I chart every single conversation within QuickBooks, then when the payment comes in, then that's also going to show, oh, and they did pay, and I would put that in QuickBooks, so it would make sense to keep all of my collection information in there. So if we did need to send a letter to them, I just have to have them selected, hit the Word document button here. Now, Word must be installed on the computer that you're using QuickBooks in order for this to work. I have customer letters, which are not related to collections. It might be about their credit limit or something, you know, not related to collections. But if I need to do a collection letter, I can say, well, I need to do letters for customers who are more than 61 days overdue. In this case, that is Christy Abercrombie, and she really has not been responding to me. So I'm going to send her that harsh collection letter, and then I'm going to sign it, because of course I'm Amanda and I am the money collector. And then I'm going to hit next, and now what I'm doing is it's going to open up a Word document. And if you've used Word before and you're familiar with mail merges, it's taking the information that's in QuickBooks, so the address, the dear name field, and it's also going to take all of their open invoices. And so rather than me having to recap them, just by hitting that button, I've got my letterhead there, today's date, her address, dear Mrs. Abercrombie, because I've properly filled out the salutation and her full name in the customer setup. And then it queried QuickBooks to say what invoices are overdue, and she has lots of these invoices. And then it has a nice little message asking her politely to contact me within the next 7 days. And there we go, I print it out. It's ready to go if I want to include the copies of the invoices, but at this point I already know she has them because I sent her the invoices, the original invoices. I called and confirmed at 30 days that she had them, and that there was no issue with them. I sent her a statement that also included a late fee. So this is my very last stop. Let's see how easy it was to produce this. So if you're dealing with lots of customers that have smaller amounts due, and you've taken all of the other steps, this would be the final step in sending this out and notifying them. And I would, just as an odd little tip, when you send out statements, which would normally be at the 45-day mark, so if you're on 30 days, you send out the bill, it's due 30 days later. At the 45-day mark, you send a statement, which would include that open invoice and any invoices open before that. So kind of in the middle of the month, like if you do billing at the end of the month, then the middle of the month you do statements, and you would assess late fees if that is part of your contract, if that's how it works. A lot of times in construction, folks won't pay, there's no room for a late fee. However, if you do need to send statements, I highly recommend, and it's so silly, pick up a pack of either yellow or pink printer paper. Just standard, not cardstock, not anything fancy. Yellow, some I don't want to send pink paper, so yellow's fine. But our minds are pre-programmed to think that anything that comes in, you know, you see in the window envelope, you see pink or yellow, it's like, oh, I've got to open this right away. We're Americans, and something about our minds are pre-programmed to think that yellow or pink paper is, you know, you see that yellow or pink coming in the mail, and you better open that first. And I'll tell you, and I know that from having done collections, I noticed a much better response when I converted to sending the statement out on yellow paper. I mean, that one simple change, I feel it doesn't really cost that much more. When I printed my statements every month, I just loaded the yellow paper and sent them out, everything the same, but I got a much better response from sending things on yellow and pink paper. So I encourage people to do that if you want the bills to get paid a little faster. It's a curious bit of psychology there, but it seems to work. So statement reminders are on page 28. This will show you how to create that statement. So when someone is overdue on their account at the 45-day mark, or whatever is the appropriate interval for your business, you're going to create the statement. This is how that screen looks. You can do it as of a date range, or you can say, well, just every open transaction that they have. So either, you know, what's open over the last 30 days and the rest would just be a balance carry forward, or just show everything that they have open. In this case, I'm only going to do Christy Abercrombie because she's the one we've been using as our example. And I don't need anything that has a zero balance. So I'm just going to preview this for you all to see. It prints a nice statement. Of course, it'd be customized to have, say, you know, have your logo and those additional things. But in this case, it's very clear. These are the original dates of the invoices, the invoice numbers, when they were due, the open or the original amount, and then what is remaining on it, and then the running balance. And in this case, it's broken out with her separate job is listed down here separately. So when you're using the job feature within QuickBooks, you're going to have this broken out by the job. And if I've assessed the late fees, they would show up on here as well. I can drop this in the mail, and rather than sending the invoices over and over again, because they already have the invoices, this is just a nice reminder that those invoices are now overdue. And of course, on the bottom, it will have the 30, 60, 90, 120, how far are they overdue. And so that is typical in this industry to, you know, to send out a reminder or have the conversation. You know, some customers are just kind of slow paying, but when you send these regularly, rather than waiting for it to be, you know, well, our terms are 30 days, but they're usually more like at 60 days, and you just know that about them. But if you wait until they're like 90 days to start sending statements, then all of a sudden it's out of the norm. So when you're sending them, you just know every customer that's open at the middle of the month that is overdue, I need to just get statements out as reminders. It really, larger companies won't pay off a statement because they will only pay off from the original invoice, and that's pretty good standard bookkeeping procedure. But when you're staying on top of it and issuing the statements, they have to look up to confirm the statement matches the invoices in the system, and that just pushes the progress along. So I like for my customers to be getting paid, so we always talk a little bit about this collection process as part of how to generate your invoices. So that concludes lesson 6, entering sales information.